Hey, what's going on, guys? This is Fire Trader from firetrading.org, and today I'm going to do a video going over what short selling is. Okay, so short selling is it's a misunderstood thing, or it's a concept that's hard to grasp by a lot of new traders, and I just want to do a short video explaining how the process works. Okay, so first things first, let me pull up the slide here. So short selling, essentially, what it is you're taking a negative position in the stock. So traditionally, when you buy a stock or go long, you buy low and then you look to sell it higher for a profit. Well, in the case of shorting, you're actually selling high and then you're buying back the shares at a lower price, making the difference, which would be your profit. So let me flip here real quick. This is a quick little diagram. I found it online. It's not the best, but it gives a pretty basic explanation of kind of what it is. So you're the short seller. You are going to your broker because you're borrowing those shares from your broker. So you're going to your broker asking if you can borrow those shares to short. If they have them, they will lend you those shares. You take those shares and you sell them to a willing buyer who wants to buy those shares at the market price. So you're taking a negative position. You're borrowing shares from your broker and selling them to somebody who wants to buy them. Now, if the stock goes down, you buy back those shares from the market at market price and give them back to your broker, going back to neutral. Okay, so you went from neutral position to borrowing shares, selling them to a negative position, and then you're buying back that negative position to be neutral again. Okay, so let me flip back here one more time. Now, the risk of doing that. There's unlimited risk. So your limited gain is basically if the stock goes to zero. That's the max you're gonna make. But in theory, a stock could go to infinity. So you do have unlimited risk with limited gain. Okay, and like I said, you're betting that the stock is going to go down. Now, a good example here, I believe it's by Bill Ackman. Don't quote me on that, but just a good little explanation. Say your friend has a coin that's worth $10, and you go to your friend, you ask him, can I borrow that coin? He says, sure. Gives you that coin. You take that coin and you sell that coin to somebody for $10 at the market price, right? So now you collect that $10. Now you think that the value of that coin is going to go down. So what you do is at a later date, say it goes down to $5, you go back to somebody that wants to sell it, you buy back that coin for $5, you give it back to your friend, and you keep $5. Okay? So that's an example of what short selling is. Now, we'll look at it as if you're going to take a loss. Say you go to your friend who has a coin that's worth $10, and you think the value of that coin is going to go down. So you ask your friend, hey, can I borrow that coin? He says, yeah, sure. So you take the coin, and you go and you sell it to somebody that wants to buy it at $10. Now the value of that coin goes up to $15. So now your friend wants that coin back. So you have to go back. You have to buy that coin for $15 to give it back to your friend, which in that case you would lose $5. Okay? And with the whole risk thing, limited risk, the max it could go to is zero. That's your max gain. And unlimited risk to the upside. So ultimately, if you were to borrow that coin that's worth $10, and that value, you go and you sell that coin to somebody that wants to buy it at $10, the value of that coin goes to zero. Okay, so you go, just grab a coin, give it back to your friend. That's $10. Bam, that's the max you can possibly make. Now you borrow that coin, and that coin shoots up to a value of $1,000. Now you have to go buy that coin for $1,000 to give your friend back his $10 coin. Okay, so that's a quick little explanation, good example. And this is a good chart showing, the potential of short selling, and, you're taking advantage of that downside risk. So this chart right here is Jemiah. If you had a theory that the stock was going to go down, you could short it up here, and as it goes down, you buy your shares back, making the difference. Okay? Hope you guys found that useful, and thanks for watching.